So let's recap again. We got 3 clues this morning here on the crude oil. And again, these clues were pretty similar to other markets we saw this morning, but we chose to trade crude because we have the luxury of trading whatever's moving the best this morning. And the first clue we got was an outside day. So we see our trading range from Friday is right here. Where am I? I am below that trading range. Now, what does an outside day tell me? An outside day says, in this case, the sellers are in charge. We are selling retracements all the way down. So the outside day says, with new lower lows, I'm selling retracements. But it also says, if we happen to fail at those lows and go right back up above that previous low of day, that's going to be a real bullish sign of the market, and we're going to be buying above that previous low of day. That was my first clue, was the outside day. The biggest thing about the outside day is we begin our day thinking, with new lower lows, I'm going to sell retracements. But we also knew if price got back up above that previous low of day, we're going to be buying. And the second clue we had was the price wedge. So again, we marked up a swing low over here. We went low to low, swing highs up here. We go high to high. We also knew there was another price wedge right inside here, go high to high right there, and that was another wedge. So we had this narrow wedge, and of course, a little bit wider here. We get the wider price wedge right there. Now, what does a price wedge tell me? Price wedge is one of the most consistent personality trait clues. In other words, when I see a price wedge, I always think fake out, breakout. That means if I break to new lower lows, I'm expecting price to stall. I'll buy the failure to new lower lows and bring it right back up. If we go above the wedge highs, I'm going to go up to the highs of the wedge, sell the wedge highs, or sell the resistance overhead of the wedge. So a price wedge says fake out, breakout. Now, isn't that the exact opposite of what we just saw in the first clue? Absolutely it is. So right off the bat, we had 2 conflicting clues here. And of course, my second clue this morning was this bear price channel. Right? The bear price channel, what does that tell me to do? Well, first of all, we know whenever we have a bear price channel, what's the highest percentage trade? You guessed it, sell at the high of that bear channel. That will always be, no matter what market, no matter what time frame, no matter what the personality traits are, sell the highs of that bear channel. And then wasn't there one other trade for a bear channel as well? Absolutely. Sell the resistance above the bear channel highs. So for example, if we break up to the highs of that bear channel, sell the highs of the bear channel. If price goes through the highs of the bear channel, it's setting up for a monster short here, guys, and I'm going to sell again the high of the bear channel. If we go through the highs, I'll sell resistance levels above the bear channel. Now, which resistance levels? Well, one of these auto levels you can see here are marked up for us conveniently on my 34 range chart. As a member, you're going to get all these indicators as well as information how to use these indicators so you can trade right along with me and replicate these results in my live trade room every day you come in. So the bear channel says sell resistance at the highs of the channel. Also, if we break through those highs, sell the resistance above the highs of the bear channel. Okay, those are 2 of the highest percentage trades we get on a bear channel. So what happened today? We got 3 clues. Outside day said keep selling retracements with new lower lows, but the price wedge said be careful of the fake out breakout. What happened was when we broke below this price wedge, the first thing I did was try to sell. I tried to sell a retracement because we were inside that bear channel. Also, we had an outside day. But what ended up happening was my initial trade failed. And once we saw those sellers fail, that's when we knew the price wedge was in control, and we knew to trade that failure and bring it right back up. So our first trade of the day today was a failure. It was a failure of the wave pattern. Almost got a loss on it. But then we realized this goes right with what we were talking about, that price wedge. Let's buy that failure and bring it back up. We had made over 150 ticks here, guys, in a matter of minutes, just by knowing what that failure pattern was going to look like. So we were pleasantly surprised here, of course, when we break through one wedge low. And you can see here, boy, it tumbles. And when it tumbled through the second wedge low, that's when I get below my big round number. Remember, guys, I'm not going to trade around the big round number. I will go below that big round number, again, below that 77 even, and I take a wave pattern short. That wave pattern gives me a +5. Stop gets moved down to -5, bounces me out at -5 for a +5, -5 scratch. Now, again, I was lucky on this one. Well, I wouldn't say lucky, right? Luck favors the prepared. We had our trade management strategies were dialed in properly, so we knew we weren't going to get in trouble with this trade as long as we got a little bit of profit off it. So I get nothing in, nothing out at 904. And this is what set the tone for the day today. This is great. Once we saw that wave short fail, I then jumped in above that 77 for a two-step pattern long. Okay, that one makes us 40 ticks, plus 5, plus 10, plus 20. 2 off at 5 is 10, 1 off at 10 is 20, and of course, plus 20 tick runner all the way up now, which then becomes a wave pattern short. So this becomes a wave pattern short. 1 second here, guys. This becomes a wave pattern short now, a 21 range wave short. Now follow me up top here. Let me show you guys how we actually took that first couple trades this morning. And you'll see it really wasn't very difficult at all. We're going to break right through 77 even. I get a new lower low, outside day, and bear channel. This makes all the sense in the world. We were ready for this thing. Again, new lower low, sell the retracement. I was ready for this thing to go tumbling on down. Okay, remember what it was? 76.35, I believe was the level below us. So we were ready for a big short here. Didn't get it. Plus 5, minus 5, bounces me out 904. When we saw the price now fail, right? Again, it goes plus 5, comes up, minus 5, bounces me out. Well, now it's an easy entry long for a two-step pattern long at 906. Only a couple minutes later, you guys, we make plus 5, plus 10, plus 20. We take it all the way up now to my 13 range trigger line. So now you can see how we got the wave pattern short on the 4 range chart, followed by the two-step pattern long. Again, this is exactly what our plan of attack was. Then, follow me back down again. You can see here, we come down, wave short, fails, two-step pattern long into a 13 range trigger line. We're now going to see, as you can see here, this is a 13 range two-step short, or, as the way I took it, was a 21 range wave pattern short, and we make, is that 60 ticks? So the first trade we took was a scratch. The second trade, we buy that failure for 40 ticks. Now, follow me back up here. Here's where your 21 range wave pattern came in. 77 is right about there. So, of course, I got short there first. Took the two-step pattern long all the way back up now into a falling trigger line. And, of course, look out below. Fast track winner, scalp winner, day trade winner. Doesn't matter how you took it here, guys. At 9:15, we make 60 more ticks. That's 100 ticks, guys, in a matter of about 15 minutes. 100 ticks, $1,000 in our account there, guys, and only 3 trades needed so far.